So where do you want to start with this? First of all, the downgrade. Michael, give us a sense. What are the challenges ahead of Facebook? How real could this be in terms of a hit to revenue?
I mean, I think the company's really being pretty transparent. As they indicated, they were going to see a loss of signal. It had experienced it in the fourth quarter. They said that they were going to have more of these headwinds in front of them as opposed to behind them. And then, Dave Wenner, CFO, and the group call back emphasized this could continue to weigh on, on the ability to target. It's going to impact ROIs through 2020 into 2021. Now, just to clarify, to your point, I wouldn't say advertisers are necessarily fleeing. What I would characterize is this is the best company on the planet with regards to behavioral targeting advertising. They operate the way I would characterize it on the efficient frontier. So when you start to lose signal, that just means the ROI is likely to decline.
You are especially focused in your note here on the direct-to-consumer advertisers. Why does loss of signal matter to them more than any other group of advertisers?
I wouldn't say it necessarily does to them. They do tend to be very, very ROI focused, where you've got a large chunk of the Facebook advertising base is branded and probably not as phased by what's going on. But direct response guys, if you've been paying $50 for a lead, all of a sudden that goes to $55, that's a problem. And based on our work, we've seen that Facebook and Instagram are the two largest distribution sources for direct-to-consumer advertising. And we're just looking at the signposts that have been popping up over the last few months, and it just feels very unsustainable.
I want you to take me through your recent thinking on this stock, and correct me if my notes are incorrect here, that you upgraded Facebook January 22nd, less than a month ago, with a buy rating and a price target of 245. Then you downgraded to a hold 8 days later with a price target of 215. That was on the 30th. And now you have initiated a price target of 180 with a downgrade to sell. That's a lot of moves in a short period of time. Take me through your thinking.
So just to clarify, we actually had a buy rating. We didn't upgrade it in January. We had just rolled our price targets as we did with everything in our coverage 2021. We did not think there was going to be as severe of an impact to numbers. And we listened to the conference call. And then one of the nice things about Pivotal in terms of as an organization is we have a really, really extensive distribution list of folks who operate within the industry, at the publishers, at ad agencies, with marketers themselves. So we actually got a lot of response. We really were not thrilled with what we heard on the call. We felt that the management team was being extremely forthright with their message. We had come out with a note that was a priority note strictly to our paying clients on Monday, talking about the impact from cookies, continue to get similar types of response, and we stepped back and just thought, look, numbers are just still modeled too aggressively with regards to the rate at which we think revenues are going to decelerate, particularly in the U.S.
Michael, stay with us here for a minute. We want to talk about another company that you cover and bring in John Fort on Google. The company's head of human resources is changing roles as employee discontent just simmers. John, what are you learning?
Yeah, Contessa, Eileen Naughton has been at Google since 2006, when the company's market cap was a seventh of today's levels, $140 billion, and they had about 10,000 employees. She joined the sales organization the year the company bought a fledgling video site called YouTube, and before it bought DoubleClick, when the slogan "Don't be evil" carried no hint of irony. Now, Naughton has led HR for 3.5 years during a time of tumult. As rapid growth has continued, Google's also faced vocal discontent from some of its now more than 100,000 employees about how the company has handled sexual misconduct, how it's handled doing business with governments, and more. Now, employees famously walked out a little more than a year ago over some of these issues. But to be clear, Naughton herself is not leaving the company. Google says she's going to stay in her current role to search for a successor this year, then take another role at Google. But what's clear, whoever takes the baton from her is going to face very different challenges than she did coming in. One of those is going to be hiring as Google scales up things like its cloud organization to compete with Amazon, Microsoft, and others. And I'm going to be talking about exactly that next hour in an exclusive with Google Cloud CEO Thomas Kurian, guys.
John, thank you very much. Let's bring back in Michael Levine, who has a buy rating on the stock, a $1,700 price target. Are you concerned at all about the inner turmoil at Google?
Not particularly. I mean, we actually think the business is executing really well. As our colleague was mentioning, like Tom Kurian actually had presented today at at the Goldman Sachs conference. It was one of his first public webcasts. And I mean, look, it's a different change in the organization. I mean, maybe, I don't know enough about her personally. Maybe she just simply does not have enough enterprise DNA in her makeup. And that's obviously going to be one of the big areas we think the company is going to step on the gas on from a hiring perspective over the next few years.
Back to what you had been talking about earlier about Facebook's loss of signal. And John, maybe you want to jump in here, but you have Chrome now putting out some new restrictions that are going to keep these third-party cookies off of their Chrome services. Will that have an impact on Facebook?
Well, to jump in here, I think if you look across what's happening in browsers, the moves that Apple has made in Safari, what Microsoft is making in the latest version of Edge, what Google's doing in Chrome what Google's doing in Chrome just follows along that trajectory. Firefox, of course, still in there as well. Does it reduce the signal? Maybe a tiny bit, but they already have so much. If that's becoming the standard in browsers, remember, they've still got signals from search. They've got plenty of signal from YouTube, lots of signal on location from Maps, Android, across all of those services. So I think you have to think of it in terms of relative advantage when it comes to these signals. And Facebook and Google still have so much more relative advantage compared to everyone else.
All right. And finally, Michael, can you weigh in a bit on the FTC investigation into these acquisitions that were not previously reported? Not just Facebook, but you've got the other big guys all on the hook for this disclosure as well.
I mean, when I look at the commentary that came out from the FTC that this was oriented at acquisitions that had been previously made and integrated, I think it's probably more of a shot at Facebook. And it's been a pretty clear message, I feel like, from DC. If I think through about acquisitions that conceivably be divested, it's just not really as clear with the case of Amazon. I mean, I guess I could point to Whole Foods. I mean, the Google acquisitions are at this point pretty far dated, not as many large things out of Microsoft. I mean, I think the message has been pretty clear. I feel like Facebook has been, where the sights are on.
Michael.